The question mark, though, in the minds of almost everybody is all that's happening within the Middle Eastern region, all that's happening within the central banks as well. What kind of impact could it have on the trade fund flows into emerging markets? And will all emerging markets be dictated by the quantum of flows that would come in from the foreign institutional investors? That's the question mark that we pose to Jeffrey Dennis, Head of Global Emerging Markets, who joins us on the sidelines of the UBS India Investor Conference. Jeffrey, so good having you. Thanks much for joining in. You know, I remember a conversation that we had 3 months ago, and you had spoken about how geopolitical events, which were prevalent at that point of time, will not have a really big bearing on emerging markets. Now, that belief has been vindicated because we've not had a big market scare due to North Korea. There is a new one on the block, though, right now, Jeffrey, and that is the Middle Eastern tensions and the rising oil price. How concerned would you be about that for emerging markets?
I suspect that the Middle Eastern tensions themselves would probably not have a great direct effect on the emerging markets. Obviously, there is a scope for more conflict in the region. I'm not an expert on the region, of course, and yet we've had conflict in the Middle East, off and on pretty much for the last 6 years since the so-called Arab Spring. But you're right, I think, to focus on the risk to oil prices and what that could do in terms of the impact on emerging markets. Now, our view has been for a long time that rising oil prices tend to be a positive for EM equities as long as the oil price increase is driven by demand factors. Now, clearly, with the change in Saudi Arabia recently, there have been some concerns about oil prices that supplies might be restricted. And so were to see another spike in oil prices based on concerns over supply, I think that would be a negative for the asset class overall. But the best bet here is that oil prices will start to subside a little bit here into the high 50s, and that risk, I think, will subside with it.
Okay. Yeah, so let's wait and monitor the situation. And I think, that's probably the best thing to do. Jeffrey, what about your view on India? Because for the longest time that I remember, at least the last 6 odd months, you have been bullish on India. It probably is, if I'm not wrong, or it probably was amongst your top overweight positions in the emerging market. Does that still stand true? And is that the theme at the conference as well today that you would be telling your clients?
Yes, I mean, we still have an overweight in India within our emerging market portfolio, and so we will be talking about that to investors. Now, I think India is a good deal more complicated at the moment. I mean, the positive side is, of course, the market's had a very good year. It's outperformed in perhaps a year when investors might not have expected that to happen. We think that's got a lot to do with the money that's come into the market locally from players in the local economy who've been put off the property sector, for example, by the impact of demonetization in India. And of course, you've had the slowdown in the economy in the current fiscal year, which is causing some uncertainty about what the growth story will be like in India for the long term. Now, our view is that the economy will recover to over 7% growth in fiscal 2019. We therefore think it's right to be long-term overweight in India. But I think the challenges in the short term are quite clear, which is that the market's very expensive. Earnings growth has been somewhat disappointing compared to the momentum of earnings growth elsewhere within the emerging markets. I think it is worth pointing out as well, however, that while India has been a consensus overweight for emerging market investors for several years, that overweight seems to have come down. And so I think a fair amount of foreign money has already come out of the Indian market, offset, of course, by the inflows, the increased inflows from domestic investors. So I think the short-term outlook is somewhat uncertain, but we still believe that India long-term is the best growth story within the emerging markets, and we would retain an overweight in the equity market for the long term.
What a few investors, though, Jeffrey, have started to worry about, and the bond markets are testimony to that, is any kind of potential shortfall in fiscal discipline or government revenue as well due to the PSU bank recap or the GST tax rate cuts as well. Where are you on that?
Yeah. I think it's a very fair question. We have a very high number of foreign investors at our conference this year, and I suspect what they're doing is that they're in India to check out what these risks are, but also to see where the long-term growth potential is of the Indian economy, and therefore, of course, of Indian companies. Now, clearly, the risks in the short term, which are worth highlighting, which the market is focused on, is one, the rise in oil prices, which is always a negative for India because obviously India imports virtually all its oil. Secondly, there is some slippage on the fiscal side for sure, and some concerns about a slight widening again of the external deficit. And certainly our economists here do worry that ahead of the 2019 election, you could see some more fiscal expansion as well, which could threaten the budget deficit numbers. But overall, we tend to think the budget is in reasonably good shape long term. You will ultimately get the benefits to the budget of the introduction of the goods and services tax, which of course came into effect just a few months ago. And I think the fiscal monetary policy mix in India remains reasonably favorable. The RBI is doing an excellent job and may even have the scope to reduce interest rates over the next several months. So I think these are risks which are there. I'm not sure they're risks that are going to derail the markets, and certainly not derail the market over the long term.
I think one trend that I'm picking up from your answers, Jeffrey, is that long-term India is bullish. The short-term may be a bit uncertain. My question to you is, and I know it's difficult to either time the market or judge the extent of fall that could come in as well. But since you brought out valuations, I'm picking that point up. At the current levels where we are at, we might be trading at anywhere between 90 to 22 times, depending on what metrics or what earnings estimates every individual house has. What extent of fall or what extent of a minor correction would make India a comfortable, I'm not saying using the word cheap, a comfortable market to start investing back again into?
Well, we certainly think India is trading at about the 96th, 97th percentile in terms of its valuations today compared to history. So it is unquestionably stretched. And it's worthwhile pointing out as well that valuations are high across the emerging markets, but elsewhere in EM, you've seen much better earnings performance relative to expectations than you've seen in India. Whereas our Indian strategist has commented regularly this year, you've seen earnings being a little disappointing. Now, I actually don't think it makes a lot of sense necessarily to say, look, if you see India go down 10%, 15%, it becomes a value opportunity, because to a great extent, I think the Indian market will be driven by global events. And global events, of course, in EM have been very uneven suddenly over the last couple of months. Some of the riskier markets elsewhere in EM, such as in Latin America and EMEA, have pulled back significantly because currencies have been weak. Whereas, of course, in Asia, particularly in China and Korea, Taiwan, where the tech cycle has been very strong, the markets have done relatively well. So I think the best answer to say is that while we are always worried about currency risk and the rupee's come down a little bit, we don't think the rupee is particularly vulnerable at this level, frankly, having seen it come down through the 65 level. And as long as global markets in emerging markets generally do not pull back sharply from here, and we don't think they will do, I think the Indian market will hold in relatively well. But if the question is, where do you have to go down to hit fair value, if you like, in India? Well, it could be 20% lower than we are today. But frankly, I don't think that's a realistic expectation, because India will be driven as ever by global events as much as by events at home.
Yeah, well, that's true. 20%, that would be great. But yeah, I take on board your point. You're just laying out a number. They're not saying that the markets would go there.
I don't want to say. Yeah, I'm not saying it will go down 20%. I'm just simply making the point. If you look at the chart and look at the valuation levels, you can say, well, 20% would make it more fair value. Frankly, I don't think that's, as I say, a very interesting code of analysis, because India is benefiting, just like everywhere else in emerging markets, is benefiting from a relatively low cost of capital. And so one thing to worry about in India would be if you were to see a big move higher in short-term rates or in bond yields, that would be a challenge for India. But I think we'll get driven to a great extent by what happens in global markets. And I think we're going higher from here over the next 12 months in global emerging markets.
Okay. Jeffrey, last couple of questions really. Almost everyone, on the investing side at least, has lauded this PSU bank recapitalization move by the government, but believe that a meaningful up move in the PSU banking stocks was done and over with the immediate next day because of the move that we had. Now, my question to you is, I'm sure your clients would be talking about that because that's that big change that has happened over the last 1 odd month in India. What are you telling them? I mean, is there money to be made in that PSU banking space, and could this bring down the risk premia in India a bit, and could that start off an investment-led cycle as well?
Very broad-ranging question. We certainly think the recapitalization of the public sector banks is an extremely important development for India in the long term. And naturally, the markets reacted, as you say, very positively when the news came out. Now, everybody knows, I think it's fair to say, both within India and people who are investing in India from the outside, that the public sector banks had tremendous balance sheet problems and did need this recapitalization. Timing of this announcement was nonetheless a surprise. I think it's a good piece of news. Now, I think what you have to do is to see, first of all, what the fiscal implications of that are, which of course are negative. It'll cost money to recapitalize the banks. And then I think you need to see how long this process takes and what the impact of that is on the behavior of the banks themselves, and indeed on the behavior of the overall market and the overall economy. So I hate to keep saying this, but I think it's probably a very, very good piece of news for the public sector banks long term, for the financial sector in India long term, which of course is a big sector in the market. But inevitably, when you get this sort of surprise news, you may get an overreaction in the short term. And so I think we need to follow the fiscal impact of it, and we need to see how quickly this occurs. But this is one of the major imbalances, major structural problems that India has got, that they are trying to fix with this recapitalization. In that respect, it can only be seen as good news for the long term.
Great. On that happy note, Jeffrey, thanks so much for speaking to us at Bloomberg Quint, and have a great conference.
Thank you very much.
Well, that's Jeffrey Dennis of UBS, clearly positive on India. Of course, says that valuations may be a bit of a stretch, but very difficult to judge or gauge as to what's the quantum of fall that we could see into Indian markets, or for that matter, any markets. But bullish over the long term in India. That's the theme that they're going to tell their clients as well.